Hey guys, in this video I will show you how I read the price action in order to determine if the bulls or the bears are in control of the market, and we will also try to establish the momentum of the market by analyzing the bull and the bear candles during a trend. So what is price action? Price action is a representation of a price movement on a given chart, and in its core it's basically a representation of the behavior of the market participants, namely the bulls and the bears. The bulls want to move the market up, and their strength is represented by upward bars, while the bears want to move the market down, and their strength is represented by downward bars. Every bar on a given chart is basically a battle between the bulls and the bears. When we read the price action on a chart, we don't have to overanalyze or complicate our trading. We just have to determine whether the bulls or the bears are in control of the market. How we do that? By analyzing the bull bars, the green ones, and the bear bars, the red ones. Before we begin, let me be clear on something. We will not look at candlestick patterns yet. So, a market controlled by bulls is often characterized by the following bar patterns. First, the obvious one is that we have more bull bars than bear bars. When we see this on our charts, this means that the bulls have more power and are increasingly moving the market upwards. Also, we will see consecutive bull bars. Consecutive bull bars is a clear indication of a bullish momentum. In a bull market, the green bodies are bigger than the red bodies. When we see this on our charts, that's a signal that the bulls have more strength than the bears. Also, during a bull control market, we will see the green bars closing near their heights. This suggests a good momentum on the upside because the bulls are trying to maintain the price higher. We will also see a lot of wicks below the green bars. This also represents a good signal that the bulls are in control of the market and that are trying to push the prices upwards. When we see the green bodies getting bigger, this also signals a clear bullish momentum. This kind of price action suggests that the bears are unable to compete with the strength of the bulls. Also, during a market controlled by the bulls, the red bars are getting smaller, as the bears can't drive the price down. Now let's look at the bar patterns for a market controlled by the bears. First, we have more bear bars than bull bars. This means that the bears have more power and are moving the market downwards. Also, we will see consecutive bear bars. Consecutive bear bars is an obvious indication of a bearish momentum. In a bear market, the red bodies are bigger than the green bodies. This kind of price action suggests that the bears have more strength than the bulls. Also, during a bear-controlled market, we will see the closing red bars near their lows. This price action suggests a good momentum on the downside. We will also see a lot of wicks above the red bars. this represents a good signal that the bears are in control of the market and that are successfully pushing the price downward, despite the initial reaction of the bulls. Also, when we see the red bodies getting bigger, this signals a clear bearish momentum. This is a good indication that the bulls are unable to compete with the strength of the bears. Also, during a market controlled by the bears, the green bars are getting smaller and smaller. This price action indicates that the bulls can't drive the price upward. Now that we know what to look at when we are analyzing a chart, let's take a couple of examples. Here's a bull control market on the Euro-USD on a daily chart. For a better overview, we added a 50-period exponential moving average to gain a better perspective on the market. Once the price action started to move in higher highs and higher lows, and the price stabilized above the moving average, the bulls took control of the market. We see consecutive bull bars, big body candles, green bars closing near day highs, wicks below the bars, and green bars becoming bigger. As long as the price continues to record higher highs and higher lows, this should be considered a bull control market, and the only trading scenario will involve buying positions. So only long positions during this kind of price action. Here's a similar example on the pound yen. The same price action. Market starts to record higher highs and higher lows. Price action above the 50-period moving average. Consecutive bull bars. Big body candles. Green bars closing near their highs. Wicks below the bars. Green bars becoming bigger, and the red bars getting smaller and smaller. Here's a bear controlled market on the same pair, Euro-USD. First, we see the price action making lower highs and lower lows as the price closes below the moving average. At this moment, the bears took control of the market. Observe the consecutive red bars, the big red candles, the bear bars closing near their lows, the wicks above the bars, and the red bars becoming bigger. As long as the price continues to record lower highs and lower lows, this should be considered a bear controlled market, and the only trading scenario will involve short positions. In this example, after a strong move downwards, the bulls gained some strength and pushed the market above the moving average. At this point, this is no longer a bear controlled market. I hope you learned a few things from this that will improve your approach when you trade the market. Price action is above simplicity, and by analyzing the market this way, you'll have more clarity above the general outlook of the market. If you got any value from this, please consider subscribing to our channel and leave us a like, as it would help us a lot in the future. Until next time.